If you can't audit your books internally, your numbers can't be trusted. What does that mean? When I see a QuickBooks file, which don't log off this video just because I said QuickBooks, because your numbers are so important to your business. It is the story of your business. It is literally how you are going to attain financial freedom. You know why? Because it's not about the amount of deals or sales you do. It's about what you do with the cash and with the numbers that are on that bottom line. I want you to have a bottom line. I want you to know where that money's going. And if you cannot audit your own books, if you don't know what to look for, if you don't know where to search to be able to see, hey, is someone stealing from us? Or, hey, am I actually making profit? Or, hey, what are my cash accounts doing? Or, like, how much do I have from lenders funds or whatever it might be? These are the things to be looking for inside of the books. And I'm just going to give you a very, very general overview of the profit and loss, the balance sheet, and the cash flow statement, and what to look for on each one, and what is each one about, and this is going to be super high level. This is what you need to know as the CEO. I'm not going to dig down into each individual line item. These are you to be able to see, what should I be looking for? What might be out of whack? What would I be looking for as the owner to make sure that everything is kosher on the books? Okay, number one. Let's go over the profit and loss, or sometimes called the income statement. Either one, income statement or profit and loss. That's a very simple financial statement because it's literally the income minus expenses equals your net profit. If you're in real estate, it might be income minus cost of goods sold, like you have properties you're buying and a work in progress, and then once you sell the property, you have gross profit minus the expenses of the business to run the business to get your net profit. But at the end of the day, it's income minus expenses. It's what did we make minus what we spent to get what is our bottom line. Now, bottom line is different from cash, and that's what we're going to talk about on the balance sheet. But what you're looking for there on the income statement is, does the income look correct? Like, for the last few months, did we actually make $100,000 last month? Did we actually make, what it's looking like up top? And did we actually make on the top line what I was projecting as the business owner? Because usually business owners have some way of knowing what is the sales, what are the goals, what are the targets, what are my projections, some sort of system to be able to say, okay, how much are we projected to make? Then you look at the profit and loss and say, does that look accurate, or is there any discrepancies? This is also where, if you pull up your profit and loss, because lots of people just don't even have their login to QuickBooks, they don't know how to get in, they don't know what they're looking for. You could even have the profit and loss or the balance sheet or the cash flow statement sent to you from your financial team, but somehow you need to be looking at those. So on the profit and loss statement, does the income look correct? If you're doing different types of deal transactions, you might even want to break down the different types of the way that you make money. So if you're a service provider, do you have an ongoing plus an upfront, or do you have like a one-off service versus a recurring service? So you might be able to put different types of revenue inside that income statement, so that way you can see very clearly, do these numbers look correct, or is there any red flags? The next is your expenses. This is usually the easiest to look out for. Okay, let me look at all these categories. Number one, do I agree with all these categories? Are we spending money in all these areas? Number one. Number two, all those numbers that we're spending in these areas, do they seem reasonable? Because if you're not looking at every dollar that's going out the door, which most owners are not anyway, we have to look at, okay, for marketing, we've been spending $15,000 for the last few months, but last month it says $25,000, then it went to back down to $15,000 this next month. This is where you might be able to dive in with an actual financial leader or someone on your team to be able to say, what happened here? Or like, why did it jump up so much? So this is where going in and looking at the expenses and saying what looks off, and do all these categories look like this is what we're spending money on? Or is there something like, look for different accounts that say either ask my accountant or suspense account, or something like that, that is a trigger, or a miscellaneous account, or an other account. If there's any of that, look in that account on your QuickBooks file or on that profit and loss, or dig into it, because usually that's either where the bookkeeper does not know where to place those funds, or sometimes we've seen that to be a place where people hide the funds, of like, they don't want the owner knowing that they're spending money and it's going into just a random account. That's why you need to be looking at the numbers in the accounts on what you're spending, but then also the actual categories of those accounts on the expenses, on the profit and loss. So that's the profit and loss, because then at the bottom line, you have the net profit, which is what are you really making from the business? Not necessarily what you're keeping cash-wise, because that's a totally different video, cash versus profit. But I wanted to at least tell you that's what you're looking for on the profit and loss. If you're going to audit your balance sheet, the balance sheet can be completely different depending on the business that you're running, but it has three main components to it. It has assets, which is usually cash, or if you're doing real estate investing, it has properties as well too, short-term and long-term assets. You might have a vehicle on there. You might have equipment if you're running machinery or something like that, a factory or doing things like you've got that inventory. That's usually your assets. Okay, so assets, liabilities, and equity. Equity is where, what is your business worth? Like, what is the equity inside of your business? That's what is shown on that balance sheet. So there's where you have, what are your assets? What are things that we own, which is what assets are. Liabilities are what you owe. And equity is like, what is your business worth? And that's usually where you have owner's draws or where you have the compensation, like if you're taking distributions as an owner, if you're paying the taxes like on a different schedule, like it's usually sits there. If you're taking profit draws, things like that, it's going to be inside of the equity. But you want to see how much is the business really worth, or like what is the business equity? That's where it's found. It's found on the balance sheet. If you have an asset account that's negative, that's a red flag. What do I mean? That means like you own a property, and because that property is worth $200,000, if it says negative $200,000, you probably have an issue. You need to dig into it. Same thing if you have a liability as well. If you have a liability, it's like a negative liability. It's like, why do I have a negative liability? The liability is a $200,000 loan. It's already on the liability side. If I have it negative, it's just the opposite. So that's just a red flag. If you see anything that's negative on the assets or the liabilities, then it's like dig deeper into that. There might be a legitimate reason. It might be because the bookkeepers are in between doing journal entries or whatever it might be, but that would be a red flag to look out for. If you also just want to do some business management on the balance sheet, if your liabilities exceed your assets, then it's like, oh shoot, we have more loans than we do assets, whether it's the cash, the cash and the properties, whatever it might be, all of your inventory versus your liabilities. It's like, okay, then we probably have negative equity inside the business and we're upside down. And we either need to make more sales and make more cash, or we need to be able to go out there and maybe sell off some of these things and get these loans off the books, because now we're upside down. We have more liabilities than we do assets. We owe more than we own. And it's like, this is where that could get very dangerous very quickly. So that would be another red flag to look out for as well too. I'd be looking at all the accounts on there. Do they make sense, just like on the profit and loss? But this is where you're going to be able to see, is my business going to be healthy long-term or not? Do we have enough cash? Can we cover all of our liabilities? Are we building positive equity inside the business? Then the last statement is the cash flow statement. That one's probably too complicated to get very nitty-gritty, but literally on the bottom line of the cash flow statement usually tells you month over month, like, what at the beginning of this month, how much cash did we have? At the end of the month, how much cash do we have? And like, what's the difference? Did we gain equity or did we gain cash position? Like, did we have more cash than we had at the beginning? But it doesn't always tell the story unless you know how to read the cash flow statement and you could dig in. That's why you might need someone to come alongside you and help you to determine and understand the cash flow statement. But at the end of the day, it's really about, do we have more cash or not? And do we know where that cash came from? And is it from the profit of the company, or is it from loans from the, that we got into the company? Because that's really different. And that would tell you, like, is this cash really mine, or is this cash someone else's that I'm just holding on to until whether we sell a property or whether we, like we finish a project and then we have to pay that loan back. The cash statement is really about that. So these are some of the things to look out for, because if your cash keeps going down month after month, that's a big old red flag saying, why am I running out of cash in the business? Like, why does it keep going down on the cash flow statement? That should be a red flag to be able to ask. If you have a CFO, they can actually tell you. If you have a bookkeeper, they might be able to say, well, here's some of the accounts. I don't know, go figure it out. But this is where you would be able to dig in to say, why are we losing cash month over month? And the cash flow statement can at least give you that red flag from the business owner's point of view. So those are the financial statements, some of the things to look out for, because honestly, no matter the business, you always have a profit and loss, you have a balance sheet, you have a cash flow statement. Those are some of the red flags, yellow flags to look out for. That way you're saying, okay, Is this something on the cash flow statement? Is our cash going down, or on the profit and loss? Like, why does the cash keep going down? Or like, why is our net profit down? Or why is this account, like, why did we spend $10,000 more this month than we do on a regular basis? Or why does this say ask my accountant or other or miscellaneous? Like, what are we putting inside that account? This is where you need to be able to at least look at these things as the owner, because if you don't know where every dollar is going, you're not able to then make the decisions to be able to get the money to where you really want it to be, which is ultimately that financial freedom. So this is how you can figure out if your books are a mess or if they're on the right track, and you could do some of your own self-auditing of these general categories. And then from there, if you need more help, then there's people that can help you dive deeper, whether that's your bookkeeper or a fractional CFO, someone that's going to really take that deep dive with you to say, are we on the right track, wrong track, and are these books really clean? Is everything going to where it should be? And is it giving us an accurate picture of where we stand financially? Thanks for spending time with me today. If this episode gave you clarity or a new perspective, be sure to like, subscribe, and comment below. If you're ready to apply what we talked about today with real guidance and accountability, visit ProfitREI.com to schedule a free discovery call with us to create your path to financial clarity and freedom.